In the world of real estate investing, speed and certainty can mean the difference between securing a deal and losing it to the competition. That's why more investors, including us at VenusVenture.us, are turning to an often misunderstood but incredibly powerful tool: hard money lending. If you've heard the term but aren't sure how it works or why serious investors love it, this blog breaks it down and shows how hard money lending fits into smart, modern real estate strategies. Hard money lending is a form of short-term, asset-based lending, primarily used in real estate transactions. Rather than being issued by a traditional bank, hard money loans come from private lenders or funds, like the ones we structure at Venus Venture. These loans are secured by the value of the real estate being financed. So, let's break down some of the key features of hard money loans. First, short loan terms, usually 6 to 24 months. Next, fast approval and funding, often within just a few days. There's less emphasis on credit, since deals are underwritten based on the asset value, not the borrower's history. You'll also notice higher interest rates, which reflect the higher risk and faster service. And these loans are commonly used for fix and flip projects, bridge loans, opportunistic buys, or distressed properties. Why do smart investors love hard money lending? Well, number one, speed beats everything. Traditional bank loans can take 30 to 60 days or even more to close. By then, the deal might be gone. Hard money loans, on the other hand, can close in just a few days, helping investors win competitive deals, fund time-sensitive opportunities, or secure properties before others can act. Hard money lenders don't need years of tax returns, pristine credit, or excessive documentation. If the deal is strong and the collateral is real, you're likely to get funded fast. Banks tend to shy away from properties that are distressed or vacant, in need of renovation, without stable tenants, or owned by first-time investors. On the flip side, investors can become lenders themselves by participating in hard money lending through professionally managed funds. At VenusVenture.us, a portion of our portfolio is dedicated to short-term secured real estate lending. This allows our accredited investors to, earn monthly interest income, be secured by a real asset, enjoy shorter holding periods, typically 12 to 18 months, and diversify beyond traditional equities or long-hold real estate. Real example: how hard money made the deal happen. A recent borrower approached us with a fix and flip opportunity they had to close in 7 days. The house was undervalued but needed significant renovation, so the bank said no. We evaluated the deal, saw the upside, and funded it in 3 business days with a loan-to-value of 65%. Result? The investor completed the rehab, sold the property in 6 months, repaid the loan with interest, and pocketed a profit, while our fund earned double-digit annualized returns on the short-term loan. Is hard money lending safe? Well, like any investment, it definitely comes with risk. But, properly structured hard money lending usually includes some important safeguards. Things like conservative loan-to-value ratios, typically under 70%, first lien positions on real estate, detailed underwriting of both the asset and the exit plan, and short durations to help limit your exposure. That's exactly why experienced funds like ours apply decades of real estate and credit analysis to every single loan. Final thoughts. Flexibility is the new advantage. In today's high-interest and, honestly, pretty uncertain market, flexibility is really the new superpower. Hard money lending gives both borrowers and investors a way to move quickly, generate returns, and create value outside the limits of the traditional financial system. At VenusVenture.us, we offer accredited investors exposure to high-yield, short-term lending as part of a diversified fund strategy built on real assets and real results.